Okay, so hopefully everybody who is live joining us can hear and see us both now. So welcome everybody. We appreciate you being here. If you're not with us live, we welcome. We appreciate you joining us. We're here today to talk about the budget 2026. Beside me, good friend and partner in crime, David O'Carroll. Dave, how you doing, buddy?
I'm very well, thank you. Can't complain.
So, aside from the technical difficulties right at the very start.
Which we'll only discover in post-edit.
Yes, absolutely. Yeah. So, very, very interesting. Second time live in less than a week. Interesting how we last week would have been very nervous and kind of last minute safety checks and all that kind of stuff. Today probably didn't do all that, and hence the reason we had the technical problems at the start, because we're a bit more relaxed. But never mind. So today we're going to talk a little bit about budget 2026. Obviously, that's kind of happening as is. There's a lot going on with that right now, and really it's just going to be kind of reactions to kind of what we're seeing and some thoughts that we have around some of the stuff that we're seeing in the market and some of the things that we've been talking about on different forums over the last kind of couple of weeks. I think before we do that, it's probably a good idea to put some disclaimers out there right from the very start. Dave, do you want to kind of cover some of these off before we kind of start getting ourselves in trouble?
Yeah, sure. So I suppose first disclaimer, we are not economists. So we are taking this from the perspective of just the average person that might be reading this on RTE or watching the Rock this live or whatever it is. So that's the kind of perspective that we're coming at. We do, and we also aren't accountants. We are experts in CGT, but we aren't full-fledged financial advisors or accountants or anything like that either. So take what we say as an opinion piece, not advice in any way, shape or form. And as I say, we're just looking at this from fresh off the reels. I watched the live stream. It's still going on with opposition parties at the moment, bickering. And we're just giving you our hot takes as to what this might mean for 2026. We thought it was timely to do it. Based on some of the material that we've published recently around what we think should happen in budget 2026. So a follow-up might be prudent.
Yeah, I think the other thing to kind of say is obviously with this type of stuff, there is a potential for it coming across as somewhat political. That's certainly not how we view this, and it's really not that case. And certainly Submyt as a company, completely apolitical, do not get involved in that. All we want to do is help people their capital gains tax. So I suppose lawyers, are we all happy with the disclaimers, right? We're not going to get sued or anything. Okay, happy days. There's no lawyers, by the way. But so I think obviously, as you say, kind of hot off the press. There's a few things going on. Dave, I suppose Pascal opened this up with some kind of high-level comments and that type of stuff. And I know you had some thoughts around that stuff. So what's the framing for all of this, the budget, some of the stuff that we've seen so far?
Yeah. To put it in one word, and I think he must have repeated it about 40 times throughout his speech, which I thought was very good. Resilience. Resilience was the word he used consistently throughout. Myself and Ian stay quite close to the markets, and we have, perhaps a wider lens on global forces than maybe the average person does, right? But, you don't have to avoid the news too much to not know about Mr. Trump and his tariffs and saber rattling and so on and so forth. That creates uncertainty in the markets. We can see the conflict in geopolitical instability is perceivably on the increase. Obviously with Israel and Gaza, a lot of turmoil in sub-Saharan Africa as well at the moment. And again, other various regions are starting to get a little bit fighty, which does create instability in markets as well. I see a lot of currency fluctuation as well. Dollar not doing so hot right now. Things like that all create an atmosphere of instability, and companies generally want to settle in countries where none of that instability exists. And us being part of the Eurozone, we do have some contagion to what's happening within the European space as well. And so if you look at things like Pascal opened up with debt to GDP or GNI, which is a better metric. And we have improved massively there, like in terms of our debt ceiling has come down quite a lot over the past few years. But we have been operating in a massive surplus. But when you look at our European partners, it's not so good, right? Certain countries, I won't name them, but some of them are quite close to us. And so the Eurozone may not be perceived as stable as it could be. And that affects foreign direct investment into the country. And with it being a large part of our tax take per year, and the fact that a huge portion of that corporate tax take is by a few companies, one of which owns half of the Docklands, namely Google. If Google decide tomorrow that Ireland ain't for them and go back to the States because of any of the various forces I mentioned, well, what does that do for the Irish economy? It does significant harm. So overall, I think it was a prudent budget. We've gotten away with some giveaways the last few years. And I suppose, again, digesting it, it's only been 17 years since, the global financial crisis. And I think people are very quick to forget how painful that was. As people saw, the Irish mentality is, if you can afford a home, that's your almost like your pension to a degree, which is, we treat homes as investments in Ireland, which is just, it's very risky. And when you see that value of what you consider your future safety net diminish so harshly, and you're paying through the nose on inflation rates to pay it, or you end up losing it, God forbid. I think that creates a huge amount of stress, turmoil, breakdown in personal relationships, all that stuff. And I think we've forgotten how hard that was. And you're kind of, when you're doing budget, I think I don't envy them. You're damned if you do, and you're damned if you don't. Be prudent now and protect the country in whatever they determine is the best way they can now for any turmoil in the future. And if things get rough and we come through it quite well, they'll be geniuses. But opposition parties won't thank them for it. And we certainly won't thank them for it now, as we've cost of living crisis, as we call it. Everything's a crisis these days. So I'm going to try and avoid using the word. But cost of living is up. There's no doubt about it. Inflation is low. So understanding why that gap is there needs to be done. And yeah, I think people are quick to forget what's happened. There is no good outcome from a budget like this right now. But personal feelings about it, I think it's prudent given the uncertainties in the markets.
Yeah, I didn't listen to the speech itself, but I think, it's something that you and I speak about quite a lot, just in terms of what the general macro outlook is over the next kind of 5 years. There's a lot of uncertainty there. Particularly around emerging technologies, AI being one. There's a lot of uncertainty. I suppose there's just different takes on what that's going to do from a job standpoint and everything else. I think yesterday or recently the US jobs print came out quite a lot lower than expected. And again, I don't want to kind of start, kind of rustling feathers and saying this is all AI related or anything like that. But I think it is fair to say that there is some uncertainty around in terms of probably more so than there has been in a long time around what that kind of next 2 to 5 year period looks like, with all of the pieces that you mentioned, the technology, the geopolitical side, and everything else that kind of comes together to make about this current moment in time.
Yeah, I think the problem is almost like analysis paralysis, right? From the data science perspective, we've never gone through a time in mankind's history where we've had access to information, and we've just so much of it now. And there's a greater degree of polarization between it. All you have to do is go onto the Oireachtas Live right now and listen to the opposition parties rip apart Fine Gael, Fianna Fáil. And it would be the other way around if they were, in power, right? But it's all polarizing. It's all, doesn't matter what you say, I'm going to hate you anyway kind of stuff. And we're seeing that through everything, right? So, example, AI, algorithms feeding me stuff saying that AI is and it's going to pop and it's a big giant bubble and it's all going to die. And all this job loss worries is nothing to fear, nothing to worry about. Now, a pragmatic person would still pay attention to that, right, and try to skill into it, with a back out. But there's just so much happening, so much going on. If you watch the news, you think the world is burning, and unfortunately, people, I think, just don't lift their head up and look around and see what's happening, because certainly from where I am, it's not horrifying. But yeah, I think an awful lot of information out there, and driven by algorithmic feeding of leaning into biases and stuff like that. That doesn't really help. I think people need to try to step back and try to see the things from a wider view, a wider lens.
Oh yeah, I mean, there's definitely echo chambers which are being fed through social media algorithms without shutting it down, right? Okay, so I suppose that's kind of the general outlook. As we kind of start to delve into then a little bit more specifics around what was covered, any kind of main highlights or takeaways, or kind of what are the main things that people are going to be talking about in the headlines tomorrow?
Yeah. So I suppose, first of all, one first hot take, I suppose, for me is the one question I'm left with really is, if you look back on budget expenditure from the Irish government from 10 years ago compared to today, it's nearly doubled. And the question I'm left with, and there's been a lot of news in the past 12 to 18 months around value for money, I suppose. To name a few hot topics would be like Children's Hospital, 400 grand bike shed, and a security office that cost a fortune as well. 3 examples of probably 2 million things the government paid for, that and more, right? But I suppose the question is, our government expenditure has doubled. Are we seeing or feeling that benefit over the past number of years? I'm sure people are, but that's just what I'm left with. Is there value for money in what we're spending? But hot topics, I mean, I suppose inflation is way down from where we saw the peak of around 8%. So inflation is back to normal levels, around 2%. Additional spending this year. So that expenditure piece that I mentioned 10 years ago was roughly half, a bit under, is going to go up again. Our debt to GDP / GNI has been tackled quite aggressively by the government, which is great. Puts us in a really good position. But in terms of what actually policies are coming along the line,
sorry, before we get into policies, can I just double tap on one of your points then? So you're saying that debt to GDP has kind of come back in line, but obviously government spending has come up. Is that just purely as a result of GDP rising, bringing in IP for all these kind of big tech companies? Is it just there's more money in the system and therefore that's kind of how it's being balanced out, or are there other kind of factors at play there?
I'm sure there's way more that we should invite Dave McWilliams on to tell us about. If he'd entertain us. But so a country from a debt perspective is no different from an individual to a degree. It's just there's extra zeros, and your credit worthiness and the risk a creditor is going to take in you matters. And the worse your rating is, the higher the interest you're going to pay. In other words, servicing is going to be more difficult. And it's also a buffer, right? So if you've got a AAA rated credit rating as a country and you need to fund, as they mentioned today, the Metrolink, which rant number 1 is going to cost a hell of a lot more than 2 billion to make or to build, guarantee it, right? You heard it here. But if you need to go find 10 billion to make that work, you can go and quickly-ish go and get those funds for it. And also, from domestic investment, in terms of Irish people buying Irish bonds, going to the government as well, you can offer decent timeframes and rates and so on. So, not an expert on that kind of stuff, but it does give you buffers, and having a good debt to GDP or GNI ratio is kind of crucial for a functioning economy, because it just buys you that ability to scale quickly in something that you need to, like, no different from borrowing against your home to build an extension at the back, or to do renovations, improvements, before you want to sell it, things like that.
Yeah, sorry, go on. Policy updates.
Yeah, I mean, the headline stuff. We're not going to do a rehash of the announcements.
Line by line.
Yeah, but I mean, I suppose very little changes in the personal tax side of things. There's things that were already there that have been extended, like mortgage interest relief and so on and so forth. Energy extension at 9% VAT and so on. Interesting how energy still fluctuates quite heavily despite being on a lower VAT rate. So it would seem that those aren't being passed on to the people. I suppose minimum wage is up 65 cents to €14.15 per hour. with the coinciding increase in the USC tax band as well, to bring that up to like 28,700, I think it was. So that's encouraging. It's 200,000 people that are on that kind of salary point. So yeah.
Any idea that I mean, not in spot, but any idea of kind of demographics of people that impacts? Is that mostly kind of students, kind of entry level workers, or is that kind of more broad
Anyone
based?
and everyone, mate. Anyone and everyone. So it could be somebody who's returning from work from a long time. Maybe they decide to stay home and raise a family, and they're entering the workforce for the first time at 45. That the kiddos are growing up a little bit. 16-year-old working in the shop for the first time. Anyone and everyone. I would assume it's a larger portion of younger people generally in part-time work, generally, or very early.
Kind of entry level type roles, working in a kind of hospitality kind of sector and that type of stuff, right?
Yeah, but there's certain sectors that would attract those kind of lower wages, like retail sectors and entry level kind of maybe customer support stuff like that. That would be the kind of some of those areas. But there's also geographical demographics there in terms of cost of living in certain parts of the country are less than they would be, say, in Dublin, and so they, But that said, I've lived Dublin my whole life. I was certainly on minimum wage. I remember minimum wage back in 99, 98 was £3.15 an hour. So there you go. That's what inflation does. But yeah, so minimum wage is moving up. I suppose one of the biggest business announcements was that kind of the food catering and hairdressing services VAT rate has been reduced from 13.5% to 9%. That was, I don't know, leaked or pushed into the public sphere before the announcement. So a bit of a hot take on it. I mean, like Ian said earlier on, we're politics neutral, but and the argument could be made that the hospitality sector, to give it a broad term, right? Although this is more services and food, so has been well looked after, and now it needs to be looked after. But I think we need to, before you cast judgment and throw shade on it, as the young people say, need to understand again the demographics of those businesses. Where do they exist? Are they seasonal? What supports have they had in the past? Because you'll notice, if you look around, very few restaurants last very long. Pubs are closing at alarming rates, and they're often community centres for smaller communities and things like that. So, a lot of people employed in those areas as well. So yeah, I think there's more to that story than what the headline might tell you.
To a degree, there's almost kind of protecting the kind of the rural piece within that as well, right? Because obviously a lot of people always come into Dublin. And I've seen it obviously as I was living kind of in the Midlands and the kind of outside Meath, that type of stuff. We definitely saw over the years that I lived there that kind of that diminishing rural kind of community. The banks were closing, the local pub closes, you're down to one shop in a church type thing, and that's the extent of it. Versus because everybody kind of moved into Dublin. So if you're not in that kind of commuter area, all of a sudden, the kind of rural communities become not a lot.
Yeah, so that's I suppose the somewhat of a double entendre with it. Like large cities with 50, 60,000 plus. Cities, townships that 50, 60,000 plus can sustain it because they naturally have a wider diversity of business. So there's somewhere for people to pivot to. But your smaller townships don't, and people want better for themselves, and they're quite rightly should have that. So if there's something that can boost those areas, I think a lot of investment from Dublin should just go out. I mean, we forget there's 5.5 million people live here. They don't all live in Cork, Dublin, and Galway. Limerick. But hey, it is what it is. Then we have. I suppose I'll get onto the one thing I missed the call on. So the ETF levies, but I suppose carbon tax is going to be one of the big ones that people talk about, because that directly affects you at the price of the pump, and it kind of talks to what we were speaking about before. we're investing billions into public transport and stuff. And before this call, I did a little thing. So if you were a little test, so if you were, if I still have it up here, if you were traveling, if you lived in Fermoy and you had to travel to Middleton for a minimum wage job, you've got two options really. Three. You can cycle, you can bus it, or you can drive it. And if you were to bus it, it's going to be a 4-hour round trip commute, 3 to 4 hours round trip commute for 25 kilometers as the crow flies, right? You can cycle it, 20k for somebody fit and whatever can do it if the road infrastructure is where it needs to be, or you can drive. And so, if I'm thinking of Dave when he was 16, 17, working a part-time job, on 14 quid an hour, I'm going to lose a fair bit of that to the carbon taxes and stuff. And but like carbon tax is just another word for tax in terms of duty and all that kind of stuff. Like 60% of what you pay at the pump is tax, right? The rest of it is actually the fuel costs. And there's very little margin that that petrol stations actually make. They're not making millions out of it. They make millions out of you buying Bounty bars at the checkout. So an awful lot of it is tax. We have to remember that as well. And an awful lot of what we pay in energy is taxation, like CGT taxation. 33% was 20% before 2008. USC didn't exist in 2006, 2007. We brought it in with the promise to get rid of it, and it never did. So we pay a lot of tax.
That was part of the big controversy around the water meter charges and stuff, wasn't it? It's kind of supposed to be put into USC and all that kind of stuff.
Yeah, exactly. And so then I suppose the other one to mention is very relevant to what we talk about, right? Is the Irish equivalent and foreign life insurance products. In other words, broadly speaking, ETFs are coming down from 41% to 38%, which I said in a video in my weekly walk and talk last week is not a chance of that happening. So I was wrong. It did move.
Not to simplify levels, but yeah.
No. I suppose the other major headline behind that is there was recommendations made by the European Council for European member states to simplify or encourage saving. And Pascal very clearly said, well, we heard the recommendation and we're not doing that. We're going to form a committee and we'll talk about it and we'll do a blah, blah, blah. Now, I'm sure they can look at the meeting minutes from all the other committees over the past 20 years that have probably recommended the same thing. But it is a step in the right direction. It's a tax that directly penalizes you for trying to secure your future. Like it never made sense to me. It seemed punitive. And I just don't get why we don't do something like an ISA in the UK. Speaking of which, we wrote an article on this that's on Irish Tax Hub's website at the moment as to why don't we? What would it look like if we did get it? And we're going to talk about that a little bit, I suppose. But it's a bit, but not far enough. Full disclosure, our recommendation is bring it in line with the CGT rate, at least. Get rid of deemed disposal, for Christ's sake. It's just a nuisance. Actively discourages people to put money away for the future. So yeah, absolutely. So I'm just going to go out and buy my Tesla instead and enjoy 40% depreciation over the next couple of years. Yay, it's good, solid financial advice. So yeah, there's no real tax efficient mechanisms aside from a pension within which you have to pay some dude whether or not he makes or loses you money until you retire, right? Most pension funds cost 1.5% to 2.5% a year just to manage your fund. Whereas this in our countries next door, there's no management fund. You manage it. You just want to invest in the S&P 500. Cool, go for it. It's not hard. So yeah, that's I suppose the main kind of things. Unless I missed anything, did I?
I think so. I mean, we were talking before the call went live about the wealth fund. I think that's what you called it, John.
It is effectively a wealth fund or a rainy day fund, I suppose. Yeah, one of the interesting ones because I didn't catch it. I haven't been watching it. But Ireland are putting money away for a rainy day, which is really, really good. And I remember the podcast from Dave McWilliams actually probably a year ago asking the question of why don't we have it. I know Norway has one. and it's basically a sovereign wealth fund for future investments for, to give back to who are children today. Once they become young adults and so on and so forth, this money be accessible to them in some way, shape, or form. I don't know exactly how the mechanisms work.
They do a lot in the Middle East, right? So Saudi and the UAE, they all have these.
That's right. Yeah.
Wealth funds, and they kind of invest in business and tech and all this type of stuff, and then it kind of goes back into the pot, which kind of, I suppose that's the kind of one of the kind of counter arguments for ideas against kind of income tax and that type of stuff, because you don't pay any income tax in Dubai, for instance, and that all comes from stuff in wealth fund. They invest the money into companies and the monies that they make out of that, amongst other things. I'm always simplifying it very high level, but
yeah, this is I don't know of any massive oil oceans that we are sitting above right now. But the funds are called the Future Ireland Fund and the Climate and Nature Fund. Should conclude with 24 billion in them next year. That's B for billion. Which again, I think if it's described the overall budget, prudent is the way I'd look at it. Just while we have this uncertainty, if we discover fusion technology or fusion energy and stuff like that, and whatever cool, and you can decide what you want to do with it, right? But
we need to invest into that, whatever company is out to develop fusion. Anybody has any insider knowledge out there, can send it on, can be great things. But what we need to do within that day is we need to invest in it via an ISA, not via the normal.
Yeah.
market.
Yeah, I mean, it's a superpower tool. It's a superpower tool. I suppose for those who haven't caught on yet, Ian is originally from the UK.
I don't think there's anybody's going to be overly surprised by that. I don't think anybody's kind of going to be mistaken from the West Coast.
I don't think it's a shock. No. And to no one's surprise, I'm some posh Dubliner, a posh accent Dubliner, and we wrote this piece. We were asked to write a piece for Damien at irishtaxhub.ie, and I was trying
to by the way, we've spoken to him a couple of times.
Yeah,
so just say Damien's a great guy. We've spoken to him a couple of times. It's been the same wavelength for us in terms of simplifying tax and that type of stuff. So.
Very much so, and trying to think about what would we write about, because we're going to be honest, we're not exactly in the sexiest market, CGT. Nobody. It's definitely not Hollywood. So
the sex sells, right? Sex doesn't sell CGT. There's not a lot you can do with CGT, I'm afraid.
No. So we decided to have a look at ISAs, and obviously has first-hand experience with them, and so we thought, well, why the hell? We tend to copy most of what the UK does from a policy standpoint. Why haven't we done this yet? And without going too far into it, I mean, it wasn't the question of why haven't we. I mean, not only government can answer that. I mean, spoiler alert, it would cost millions or potentially billions in revenue, right, for the government. But fundamentally, what is an ISA? An ISA is an allowance of up to £20,000 per year. You can, let's go back a step. Say you work for Google, and Google give you 10 grand a year in stocks and shares. When they vest, in other words, when they're made sellable to you, you can sell them, pay your CGT on them, then and there to the HRM or whatever they're called. Take your earnings, gains, whatever you want. Let's just, for argument's sake, say there's like 7 grand left, and you can put them into buy positions in your ISA and rebuy your Google stocks, or diversify into the S&P 500, or do whatever the hell you want with it, right? Go buy a fund or currency, whatever. And it sits there for as long as you want, Ian, right? And its gains within that are tax-free. So if in 5 years' time that has tripled in value, and you've got a sizable gain now, of £14,000 sterling, you exit it and it's yours to keep. Done. No CGT, no anything. And we don't have a mechanism for that at all. And the question is, why not, But Ian, perhaps you've experienced it, so perhaps give your take on
Yeah.
that?
Well, I mean, the fundamental, I mean, ISA, if anybody doesn't know, it stands for individual savings account. And there are different ways that you can do it. So you can have cash ISA, you can have a stocks and shares ISA. And the same way as if you invest in, say, certain things in Ireland that you don't pay, kind of tax on the gains and that type of stuff. So I think like not premium, I can't remember what they're called, and prize bonds. You don't, if you win on prize bonds in Ireland, you don't pay any tax on that. It's a similar kind of mechanism. So if you go into a cash ISA, you get 4% a year or whatever it is, and that's all tax free. Or you can kind of open a separate account, which is a stocks and shares ISA. And you can invest money into that. You can, as Dave says, you can invest in up to 20 grand a year. And anything that you can do that continually. You can put that in. You can only put them in across all ISAs. So I couldn't put 20 grand into say my CAC ISA and 20 grand into my stocks and shares ISA. It's a total of 20 grand. And then any gains that come within that are tax free. Obviously that kind of saves them on the paperwork and that type of stuff as well, because it comes in that mechanism. Now the way that it kind of works is that the platforms in which you would have your ISA are protected up to like, or kind of secure up to like 80 grand or something like that, insured by the government. So, if anything goes wrong and, say I was using Trading 212, for instance, if Trading 212 collapsed, then I can get my money back. There are mechanisms for me to do that up to 80 grand within a particular ISA. But most people just go put it into a separate ISA. They have multiple ISAs going on. But it's a really handy kind of mechanism. So, I last year kind of bailed a bit and took advantage of a couple of Mag 7 companies and made a little bit of money, kind of took it out. And no tax, great, happy days. I think the kind of the narrative or the argument for it is obviously kind of what you were talking to before around EU kind of incentivizing or wanting to incentivize people to kind of save more, and kind of take responsibility for their own financial futures and their own financial freedoms. I think ultimately that is what that ISA mechanism does, which is fantastic. But obviously the kind of the counter argument, and this is kind of that kind of political kind of debate that needs to happen, is obviously if you then take away the revenue that say, the Irish government would receive, or the lost revenue rather, from taking it away from people paying capital gains tax on their RSUs and that type of stuff, or they're trading on Revolut or whatever they want to do, taking that money and not putting it into the coffers, so to speak. But then you have individuals who are perhaps wealthier and can kind of take control of themselves, eventually a little bit better off because they're able to save at a rate that's not going to be kind of constantly penalised. That's that kind of political debate that kind of needs to kind of take place, right? Are you better off then from without getting into politics, but this is the debate that needs to happen, is that are you better off not having that money as a country and allowing your citizens in that country to have a little bit more financial freedom and securing their own future without being reliant on the government? Not that type of stuff, right? So I don't want to kind of go into what should or shouldn't happen and kind of give my opinions on that, but that's the kind of the narrative and the conversation that would probably need to happen at the government level and at the country level when it comes to election times and that type of stuff, if they wanted to do that type of instrument.
And what are the trade-offs, perhaps, right? So this is the thing with policy. It can be defined in any way you want to. Say retirement pension was means tested in 30 years' time, right? So you're only getting your 200-300 quid a week if you have less than X in assets. That alone would save the exchequer billions a year.
I'd be surprised if we don't have to get to that, right? And this is any country really that has the kind of pension model. I think it's going to run into troubles. And this is kind of you hear people like Musk and that type of stuff, whether you love him or hate him. He talks a lot about population decline over the years, and this is the thing of what happens with an aging population. You've got more people that are getting older, health as kind of people being able to be live a longer, healthier life. So you've got more people having to be supported by the system, and you've got less people of working age because you're not having as many kids as what you used to do.
Yeah.
And that's the problem. It's because you're having to kind of take from that kind of middle population who are of working age to feed. So you're always kind of borrowing from your future self, right? And that, at some point you run into problems when the amount of people who need the support, there's not enough money coming in from people that are working. So
yeah, but I mean, I suppose it covers a hugely broad spectrum, though, because again, not knowing what the future holds. Going back to where I believe Pascal and Co are coming from is that uncertainty, right? What do jobs look like in even 5 years' time?
yeah,
None of us know, and be very wary of the people who say that they know for sure, because they don't. Nobody knows what's happening in the future. But yeah, so it's an interesting one. But I suppose onto the as I think Pascal described them as IRAs, or those Irish amongst us, be very careful with the terminology. But we're just hoping it's called ISA. But I suppose the attractive thing for me is it gives you direct control of your funds and your future, and it's something we're quite passionate about with Submit, in the sense that yeah, we do the CGT stuff, and that's great, and we simplify it, wonderful. But one of the things we talked about earlier on while we were developing the UX, the UI for it, was the portfolio view, and giving people a holistic view of their gross wealth from multiple platforms in there and stuff. That's what I kind of like about the ISA idea, is that, okay, I might have my pension with some contributions from my employer. That's one little neat pot, and I get a letter from them every 6 months, 12 months, telling me how much I've made or lost in that. And then I've got this other thing that I directly control. That's not a bank account that's losing out to inflation, that I can access. I don't have to wait until by the time we come to retirement, probably 74, by the time we get to actually access our pensions. Again, something you don't control, that's state mandated policy that will determine that. Now, I'd say Pascal O'Donoghue, who turned around today and said that the pension age will be 73 from now on, I think there'll be people in the streets. But you just don't know what's going to happen in the future. It could be 50 by the time we get there. I very much doubt it, but it could be. And but that's what I love about the ISA, is that if you need it, you can use it. And that's it. And I know the US have a slightly different one. They have a Roth IRA, which you can borrow against and use for capital expenditure. In other words, you can borrow against what you have in there to buy something else. Like if you do want to do something very fiscally responsible, like buy a Ferrari or something like that, you can go ahead. But I just like the idea of taking ownership of your financial future.
and I could be wrong on this one, so don't quote me. If anybody knows differently, feel free to correct me in the comments. But I think one of the challenges around savings accounts and that type of stuff that I've seen over the years has been, you don't have to lock your money away for a period of time. You've got to give it away for, I'm going to put it in, for 3 years, and I get 2% a year or whatever it returns, and what that looks like. But if I need that money next month because all of a sudden like happens, right? Then you get to this point where, well, I can't take the money out of that. I'm going to get charged penalty for closing down. I don't know if things have changed and there may be different mechanisms, but I think in the UK, the cash ISAs, you can set money out. You can't accrue it on a daily or a monthly basis or whatever that is, but you just get access to the capital when you need it, as opposed to if it does hit the fan. So I could be a little bit out of my wrong on some of the general details there, but I think loosely that's kind of how I understand certainly many of them work. So, okay, cool. Anything else on budget 2026? Anything else that we want to talk about before we wrap up?
No, again, without going too much into it, because people can read the actual things that will be relevant to them. No, like I said before, I think it's a prudent one right now, just with the level of uncertainty that's out there in the global markets, particularly around some of the IMF reports and stuff like that. It's just we don't know. So, like like I said at the start, you're kind of damned if you do and you're damned if you don't. You can be flippant and daft now and give everybody €10,000 worth of tax credits or reductions in income tax and all that kind of stuff. And then 2 years' time, I'm sorry, you have to edit the scene, but the falls out of everything. And we'll be sat there blaming them for it, So whereas if we're cautious, considerate now, and we do hit some stormy weather, it'll stand to us as a country competing in the European market and on the global market. Because again, like I said before, and I'm pretty sure, but I'm absolutely sure that the Irish government are aware of this. A lot of our revenue take per year comes from a very small group of companies who could easily be swayed to take their investment in the country out of here and go back to the States because Donald wants them to, and gives them a big enough financial reward to do it. And we can't compete with North America when it comes to something like that. Maybe the one thing we have is the education side of things and the kind of geography side of things in terms of stable climate and things like that. But yeah,
very competitive corporate tax rate. Let's not forget that.
That was kind of levied off though. Biden introduced that kind of global tax rate thing. I know we do have the sweetheart deal and also, what was it called? Can't remember the name of it now, the IP side of things. But yes, true, absolutely. We do have a good, well, we had a long time of running absolutely outrageously cheap corporate tax rates, which convinced companies to come over where they saw some of the benefits that the Irish population could provide with the education and stuff like that. But we also attract in a huge amount of talented individuals to the country as well, to supplement those gaps.
I don't know if we kind of covered it too much. I'm kind of putting myself in the position of somebody who's been out of Ireland now for just over 12 months. But, I'm looking at that as the Ireland that I remember, and I'm thinking what was top of mind back then is more likely it is still top of mind now for everyday people, right? So it is the housing crisis, right? Mm-hmm. Rent, mortgage cost, the price of housing, very, very, very very expensive, very hard to own property ladder. People, kind of into their 30s now, still living at home because they can't get up to the property ladder. So there is a big, I expect, and I don't know if we've seen it online yet, but I expect there to be at least some reaction to that some of those kind of concerns haven't been addressed within this budget, from what I've seen at least.
They've been addressed, but I suppose we can close out on a hot take, right? Not a hot take, but a rant. So yeah, new completed site developments VAT rate has been reduced to 9% without any mention of controls as to how that affects pricing. And why is that important? I can't remember the year, but I do remember listening to it on the radio because I was walking past Dáil Éireann while they were in there having a chat about it. And they talked about bringing the first-time buyers credit in, which was €40,000. So if you're a first-time buyer ever, you got €40,000 grant towards your first-time purchase of a home. And at the time, myself and my partner were looking for a house, and we were looking at a particular development. I think it was in Lucan at the time. We'd only just started looking. And for argument's sake, say the place was €400,000, right? Just for argument's sake. It wasn't. It was substantially less than that at the time. It was 10 years ago, longer. But say it was €200,000. The next day, the price had gone up by 40 grand. Because the developer, it's a capitalistic society. The developer knows, hey, these guys have an extra 40 G's in their back pocket. Well, I have 100 units to sell. That makes me a huge amount of money, so I'm going to up my prices. And so, great intention, just awful execution. Because anybody who can make a couple of extra bucks on something is going to make a couple of extra bucks on something. So you can reduce VAT rates all you want. And by the way, this is the same reason why we don't abolish taxes, because if you get 20% extra discretionary income in your back pocket, fantastic, but it drives the price of everything else up too, because everybody has the money, short and supply, simple supply and demand economics. And demand goes up for stuff that becomes scarce. So if everybody wants to run out and buy Teslas and Maseratis and all that, they'll go ahead, but they become scarce and become more expensive, and then you're right back to square one again. So so I think a few things like that. Property is tough. Some of the programs are already there, have been continued, but listen, unless you bring in a small army the size of a country to come in and build 100,000 units, not going to solve. Not going to solve. You have to saturate supply, but then you'll off people who own homes. To that, I say tough, because we need to stop looking at them as investments, because people need roofs over their heads. So yeah, hot take, hot rant. Sorry, people are going to hate me for that. People are going to think I'm making sense. Don't care.
I mean, look, it's the reality on the ground, right? I mean, people are going to people look at their own personal situation, and there'll be a lot of people out there now who are really struggling with stuff. Going, how the do I get onto the property market? Or I need to go and, I've got to renegotiate my rent now, or I've got to go and move house, and the price of rent has gone up by, whatever it is over the last kind of 12 months since I last did it, and, just can't afford it. Like, it's ridiculous. Cost of wages, despite the 55 on the wage, cost of wages haven't gone up in line with property prices and everything else. So people feel like squeezed on a daily, weekly, monthly basis, right?
Yeah, no. So wage increases haven't been in parity with inflation for 30 years more. Like, it's a wedge. Like, it's continuously gapping. Like, no, so absolutely not. I know firsthand loads of people who currently rent that have kind of sadly given up. And these guys are in great jobs. Like, they're not. There's no kind of what's the word I'm looking for? There's no kind of expectation of a home to be given to them. They earn above the median income. And there's just no chance at 3.5x. I'm not suggesting for a second we lose some lending constraints, because that's what got us to trouble the last time. But it's price and supply and demand metrics. Like, it just needs to come back.
Supply and demand, 100%.
Yeah, but the thing is that they've sadly given up, and so they've somewhat moved into experiences rather than aspiring to have home ownership. And I suppose personally, my worry is that, say we do tomorrow bring in an ISA, you're instilling a change in people's behavior, right? Why shouldn't I go to Las Vegas 3 times a year? I'm screwed anyway, so you might as well do that. And I think those issues compound over time. So yeah.
Indeed. Okay.
Dave's rant and hot take. Good way to finish on.
I think so. And we run the risk of going a little bit a bit too far down the line and do a bit more hot take. So we'll probably stop there. Thank you, everybody, for joining us. We really do appreciate it. If you've got any comments or anything like that, we'd love to hear them. Get your feedback on and thoughts on budget 2026. And perhaps you could completely disagree with us. That's fine. That's what it's about. It's about having life and dialogue. We're not part of this kind of echo chamber, kind of social media algorithm where we only want to hear our own opinion echoed back to us. So please do kind of put your opinions across, but really appreciate it. And again, as always, if you have any capital gains tax needs, you know where we are. With that, thank you, everybody. Speak to you soon.